Good morning, everybody.
Good morning, Richard.
We are here today. We're going to have our insurance panel. And our specialist for today, Leticia Pomes, Allstate. Mark Wu with Allstate. And Lily Hull, State Farm Insurance. I'm going to give them all about a brief 30 seconds and give you a little quick profile. Leticia?
Okay. Well, I've been in the insurance business since 1987. Always in Temple City on Las Tunas Boulevard. I have a family business. My kids have grown up in the business with me and are currently also insurance agents within my agency. So been doing well there and ready to help you for home, property, and much more, life insurance and much more. So glad to help you.
Thank you. Lily?
Good morning, everyone. My name is Lily Hall with State Farm Insurance. My husband recently opened his State Farm Insurance in El Monte 3 months ago. I've been in business for 3 years, serving the San Gabriel Valley, Tri-County area. We can actually write everywhere. We offer home, auto, commercial, life insurance, vehicle loans, checking, savings, all types of stuff. So being in business as a new agent, it's very, pretty difficult in the beginning, but, just like real estate, just like insurance, it's always, just finding a mentor, finding someone good to assist you through this. So being ranked top 10 my first year, so there's hope out there to do well. Thank you.
And last but not least, Mark Wu.
Always last with the W name. Good morning, everybody. I started my career in this area in 1988, so next month, in about a week, is my 30th year in this insurance industry. Yeah, lots of gray hair. Thank you. But it's been a great career. It was a wonderful opportunity to establish my own business, be in control of my own success. So hard times used to go up and down the streets locally. I lived on Delta Avenue, which is about 4 or 5 blocks from here. Used to walk up and down the street with my wife, and we'd door knock and just hand out flyers, and that's how I started my first clientele base. But here we are now, and this sport has been a home for me for a couple of decades as well. Thank you.
Very good. We will start this off with Leticia. Leticia, what is the difference between a landlord and renter's policy?
Well, the way I see it is, it's the perspective. If you're the landlord, what do you want to insure? It's your building that you paid for. So if there's a fire like the ones that just happened, you want your building to be rebuilt, right? If your tenant falls down and sues you, again, your perspective, you want protection for liability. Okay? So a landlord policy is protecting the landlord. Loss of rents, that sort of thing, due to fire where you can't have the tenant in there. So the other way is renters. Now you're the tenant. Do you really care that the building burned down? No. It's not your interest. What you're interested in is all the things inside. Your nice, maybe clothing and big screen TV, all those things that you have purchased for many years and are valuable to you. So the perspective of a renter is, I want to protect my things if there's a fire, and so the insurance company will protect me there. The other thing is, if there is a fire and I can't live there, I want the insurance company to help me move to at least the extra funds to help me temporarily while I stay somewhere else at a hotel or temporary living. Then the other thing is, what if you as a tenant have a little puppy or bigger dog or something and bite somebody, right? So you as the renter want to be protected so it doesn't come out of your own pocket. In a lawsuit, so the insurance company will defend you. So that's the two perspectives. That's the way I see the differences, basically.
Great, thank you, Leticia. Next question, Lily. How much does a CEA homeowner's earthquake insurance policy cost?
Well, a lot of my customers ask me, is earthquake insurance expensive? And I said it really depends, because it depends on where you live. If you are at a, I guess near a fault, more likely where earthquake will happen, you know, it's going to be more expensive. But they look at, you know, how many stories, what foundation, the year built, what your limits are, what your deductible is. And a lot of times they will match, if your home insurance, your dwelling amount is basically how much does it cost to rebuild your home? Let's say it's $500,000. That number is going to match with your earthquake policy. And it follows. When it renews at the same time. So a lot of people are like, oh, I thought it was that different. No, because the homeowner, it may go up to $550 the following year because of inflation. Your earthquake will follow $550. So you're going to see a little jump for both. Thank you.
Thank you. Mark, what will the impact of the recent wildfires be to the insurance industry?
Wow, throw that tough one out there. I was given this question later, and so I don't know if you guys know this, but our recent wildfires in 2017 were the most destructive wildfire season in California. It cost the insurance companies $13 billion. That's with a B, billion. And so it destroyed more than almost 11,000 structures. And so what is going to be the effects of this? Well, first of all, you guys are in business, and so insurance companies basically try to diversify their risks and all that. So if they have a substantial loss, and now I'm talking in generalities, but if they have substantial loss in a particular market and all that, you know, it's going to be something that they're saying, hey, we better get out of that market, we better restrict our market because, you know, we want to be able to have claim paying ability, and if we're paying billions of dollars out to and receiving not billions of dollars, then something's not right with this pictures, and we won't be able to be sustain our viability in this market. So what I see happening, and I confirmed it with a few people, is that their companies are starting to restrict them in their abilities to write in not only brush area, but what was normally not considered brush area, but close to brush area, that companies are withdrawing from those zip codes, and so restricting their agents' ability to write there. And so you will see, not in the near future, I mean immediate future, but in the near future where rates can be challenged in those, I mean increase in those areas, and the ability to get preferred carriers that want to write in that area is going to be challenging.
Great, thank you. Letitia, what is the difference between a homeowners and a condo HO6 policy?
Okay. I'll tell you what's similar with both of them. They both will have contents coverage in case of a fire, like the after vandalism. They both will have liability insurance in case of a lawsuit. And they'll both have some kind of help if you can't live in the property. What is quite different is, let's say with these fires that occurred recently, if there's a fire, they're going to deal directly with the owner in rebuilding the whole structure, right? They're going to help you with the contents coverage and all of that. The whole package is dealt with directly with the customer with rebuilding the structure. When it comes to a condominium, it's different because there may be two insurance carriers involved. One carrying the master policy for the complex, and they're normally in charge of rebuilding the structure itself. And then the common area liability and so forth. But the condominium HO6, the individual unit owner's policy, that one will have to go with what does the bylaws of the HOA say, the Homeowner Association, what does the CCNR say? Do you have to have your own coverage for the interior walls or not? So it's a little bit different. So if there is a claim for fire, let's say, then there'll be two insurance carriers possibly involved. One to handle the rebuilding of the structures, and then one to handle the individual owner, okay? So that's basically what I see as the main thing you should focus on. is possibly, well, is following the CCNR rules. And sometimes we as agents have to dig into that to find out. It's not just known across the board. It's all different, depends on the association.
Good, thank you, Letitia. Lily, I own my own condo unit. Are there coverage options for me?
So basically this is referring to earthquakes. So a lot of my customers have a condo unit and they ask me like, I want to buy insurance to cover the structure. I said, well, usually when it comes to structure, it's all like combined, like in one building. So I said, your master policy, unless your HOA purchases a earthquake insurance, you know, that will cover the outside structure. However, if you want to protect the inside of your house, like the personal property, if you want to protect like the basically in walls, kind of like your cabinets, your floors, just in case if there's an earthquake, we can definitely provide that coverage. So there's really a difference between having the outside. What exactly do you want to protect? The structure, or you want to protect the inside? Because when it comes to the outside, you have to ask your HOA, do we have a policy for, you know, our earthquake? One other thing is, let's say they do have a master policy and there is a loss. You know, everyone has to pay deductible out of pocket, right? Because it's the whole building. So let's say your deductible is like $20,000. Well, if you have a condo unit earthquake policy, there's a coverage called loss assessment. You could use that to pay for your deductible to help you with the master policy. So that's something called loss assessment. Thank you.
Very good. Mark, what types of perils does a homeowner's insurance policy cover?
Okay, so basically what a homeowner policy covers are things like fire, wind, hail, explosion, falling objects. What are falling objects? Well, you know, it could be a tree coming on top of your house, and it can be ice that comes through your rooftops from a plane de-icing, or even the plane itself falling on top of your house, or even a car itself coming and falling on top of your house. I don't know if somebody saw a chase scene a month ago where the car went up and into the top of the second story, right? So perils such as that are what are normally covered. So then there's flooding, but flooding is qualified coverage, because if it's basically a bursted pipe, then it is covered. If it's surface water where the water has hit the ground from the outside and come back in, then it's not. Then you have to have flood insurance. All right. I
think my other question was, is it what are not?
Extended limit.
Oh, okay. So let me just go through a couple more things. So people always think about, well, what about if there's earth movement, or hey, now I have cracks in my foundation and all that. You know, things like that will not be covered, because it's basically coming back again to earthquake. The question we always get to is what about things like, well, you know, the retaining wall is coming down. You know, is that covered? And that's not a peril that's going to be covered either. All right.
Thank you, Mark. Letitia, what is the difference between a personal umbrella policy and a comprehensive personal liability policy?
Okay, comprehensive personal liability policy, or sometimes we call it CPL, is the liability that we attach to a property. So if you if you have a rental unit and you say, you know, I just want the California Fair Plan, that's just a cheap fire policy, and you don't buy liability, then there's going to be an issue if somebody sues you, right? So sometimes people will say, well, I really can't get a regular policy, I'm in brush or something, so I need to add liability on it. Well, some people will just buy a separate liability insurance to cover you on that property, okay? So that's what that is. It's something you should actually have. Some people, if they can, might as well package it and make it a landlord type all-comprehensive policy. But if for some reason you cannot, then you would want to add on a separate CPL, comprehensive personal liability. Okay, then what is then an umbrella? An umbrella, think of a big umbrella, right? What do you have under it? You have your home, you have your cars, you have your boat and motorcycle and RV and jet skis and all the things that could cause a claim for liability, right? So I'll give you an example. Somebody, okay, let's go to the dog thing. You have a dog and it bit somebody, right? And it scarred them pretty bad and they can't go to work for a while and they sue you for, let's say, $500,000, okay? Well, you have a homeowner's policy that will defend you and will pay out for that because it was your dog and so forth. But it'll cap out at its liability limit. Maybe you purchased $300,000. So they sued you for $5. What happens to $200,000? You have to go to the bank, sell stuff, what? But if you have an umbrella policy, it will defend you and it will pay out that difference. Because let's say you bought $1 million policy, well, you have enough, right? It'll come in as a supplemental additional liability. See? So same thing could happen on car insurance. First, they'll go to the policy involved, so it'll be the car insurance. It'll tap all the way up to its limits, but if the lawsuit is bigger and warrants more, then you'll have that personal liability to defend you and pay out, if necessary, that supplemental amount. And I've seen it in use, and it's very useful, especially in today's society where everybody sues everybody. Okay? So, same thing goes for boat, for RV, for motorcycle, all of that. So just think, the CPL was just limiting to maybe 1 or 2 properties, but the umbrella is this supplemental, really good product that you should always talk to your agent about. Personal umbrella policy. It won't cover commercial things, but it'll cover your personal things. Okay?
Thank you. Lily, what's the difference between homeowners and homeowners' choice policies?
This is regards to earthquake policy. So there's actually 2 types of earthquake policy. Homeowners, the older type, which includes the dwelling, like I mentioned earlier, $500,000 can be your dwelling. Let's just say, for example. So the homeowners include dwelling, personal property, and loss of use. So a lot of times when you get something in the mail, it's most likely the homeowners. So homeowner choice is a little bit different. You can have the dwelling, that's required. You could disregard the loss of use. You could disregard the personal property if you really feel like you have nothing in there to insure. However, the personal property, you can actually select to have a separate deductible. So some people says, well, what if my whole house doesn't collapse but my stuff gets ruined? You could actually get a separate deductible for that. However, it's more expensive. That's all.
Thank you, Lily. Mark, is it important to have loss of use or loss of income on an insurance policy?
Okay, so you've heard these terms thrown out, and it's really important when you're getting policies. For instance, you know, Letitia talked about a condo policy where loss of use or loss of income on that. Why is it important that that be a part of policies? Well, I've seen policies where the agent has left it off, and so that's critical to you. Loss of use pertains to in the event that you are the owner of that premise and you are not able to stay in the condo or the home because of the fact that you know, something has happened that's caused covered. Loss has caused it where the house becomes uninhabitable. So what that does is it will pay for you to be in another place as your house or condo is being rebuilt. And the companies have to give you the standard that you're accustomed to. So if you're living in a dump, you can't say, well, I want to live in a Ritz-Carlton or a San Marino home. But if you're living in a San Marino home, they can't put you in a Motel 6. All right? So it has to be what you're normally accustomed to. Where loss of rent is important is, what if Lily here is my renter and now the place is burned down and now it takes 8 months for the house to be rebuilt, and she was paying me in my San Marino home $5,000 a month, you know, that's what, 40 grand. So what the companies will do is that they will reimburse you for the income that you have lost as if Lily was still living there until the house is again habitable and I can start collecting rent. So it's small, it's way down the list oftentimes in insurance coverages, but if agents are trying to sell you a policy and strip down and it's a way for them to deduct costs, you might not realize that you're not getting it and it's a vital coverage even though it's not very expensive to have.
Great. At this time, I'd like to open up for questions.
Yes.
Yes, David.
I have a question.
Go ahead.
This question is for any one of you. If a property is damaged by mudslide, is that considered covered under the general homeowner policy or is that under the flood policy?
Take it.
Go ahead, ladies.
Anybody?
What caused the mudslide?
Oh, well.
I'll just make a comment here. Usually the, let's say for example, the fires that just happened, what came first? So if it was the fires that burned the house, then they're going to go after the fire policy to cover that. But if it's only, or specifically the mudslide, then generally that's not covered.
Mark?
Okay. So basically, mudslide is very unique because it really depends on what they call the viscosity, meaning how much water is with the dirt. All right, and so and there's and I forgot what the percentage is just because we don't deal with a lot of that in the area, but there has to be a certain percentage of water in that. Once that happens, then you have to have flood insurance to cover it, or else you don't have coverage at all on any of your normal policies. So it is an extra coverage, and then even if you have the coverage where flood, there's not a blanket 100% coverage that, hey, if there's a mudslide, my house is automatically covered. It has to fall within the parameter of definition of what a flood is, and so mudslide's part of that.
Can you get a mudslide insurance?
No.
Mudslide is part of the flood policy, and it has to be defined within that. So there's not a dirt slide policy.
And
At
just
least
so
that
you'll,
I'm not aware of.
yeah, just so you'll know what is the difference between what is flood versus raining a lot and water coming down through the roof, through the winds and the storm and all that. Flood, they usually say it's the water is coming in through the bottom of your door. So it's on the ground and then it goes into your house. That's usually how they consider flooding.
From the sprinkler system?
That could be only if it's under the house. Someone put a hose.
I can answer that. I just want to try not to hog the mic. So when the water comes from outside in, remember, that's the definition of what's normally not covered. So when a sprinkler leaks and it comes back into the house and all that, you're going to have zero coverage because the insurance companies are going to consider that to be a flood, even though, because flood, the definition, surface water, on the ground, outside in, coming in. Okay?
I have a question.
Yes, Mike.
My car's covered by AAA, and then my house covered by State Farm. So Leticia was talking about the umbrella, and what should I do with the umbrella thing and what they really cover? How do they work?
Well, you have a choice. You can get your umbrella policy with any of those carriers, or you can get it with somebody that can just do a brokered policy. I don't know if I can say this, but we offer it here in my agency.
So what is it cover? Cover the car or cover the house?
It's the liability supplemental over those primary policies.
So the simple answer to your question is yes, you can get a policy. You don't have to get it with the same carrier to get the umbrella. Just understand that, and one thing that you have to be really sure about is the umbrella covers the same entity. All right, so you can't have a whole lot of different entities within the umbrella and thinking that, hey, just because I get an umbrella, I have excess liability. So just think as something that's really important on the umbrella is there's an underlying limit. Okay, what that means is that you have an auto, you have a boat, you have a house, you have land, single family 1 to 4 rentals. You have RV, you have motor homes and whatnot. All those have to have, depending on the type of umbrella and who you buy it with, a limit that they say, hey, we won't pay anything under this, but we'll pay anything above that up to the limits of the policy. So as Letitia said that, hey, you have a $500,000 dog bite, your home, say it's with XYZ company, will pay up to the $300,000, then the umbrella will pick it up. So now you have basically 2 companies, because you have chosen to get separate companies that will be helping you litigate or defend or pay off that one claim. All right? Do you understand that? So underlying limits, every whether it's your auto, your home, and all that, there's a certain limit that your umbrella policy is going to require, and then the umbrella is going to kick in. So sometimes it's the same company that does both, but it's still 2 separate policies, and sometimes it's 2 separate companies that are handling that one claim.
Just to emphasize what he's saying there is that underlying limit usually is $300,000 is required on your properties for liability. That's the minimum that they will accept in order for you to get an umbrella. And then on the auto, you need to have at least $250,000 liability, bodily injury, and on all the other driving things, motorcycles and stuff.
Yes, go ahead.
If you don't have a guaranteed replacement on your home and your home burns to the ground, with regards to windows and other retrofits, so how do you fund a rebuild, and what would the homeowner have to bring in? Because I have a bunch of original windows and I'm concerned. The city inspector told me that if something went wrong, it would cost me several $1,000s, and so how can I avoid that, or do I need to change to a policy called a guaranteed replacement? What is the thought process for older homes with older windows and doors that don't meet today's energy codes?
Okay, well, I'll just make one comment. Probably everybody will share something there, but you need to ask your insurance agent that has the property, let's say for your homeowners, do you have replacement cost on your policy, and do you have an extended coverage? So usually the insurance carrier will ask you details of your property so that you will have an estimator from the carrier give a number out to say you need to have at least this amount of coverage. That will say it's, let's say you're expecting it to be 100%, right? You're at par. And then what if at that moment in time wood or material or labor or something ends up costing more? Then you have an extension. Some carriers will give you 25% extension above your 100% what we estimate. And some will give 50%. Not every carrier has guaranteed replacement cost. Okay? So that's just one little tidbit there.
Yeah, usually your insurance agent will enter all your information in a calculator for estimated replacement costs. Yeah, like Leticia says, some will give you 20% on top, some will give you 50%. Really depends, really, talk to your agent to see, maybe you did an estimated replacement cost 10 years ago, maybe it needs to be upgraded. Because some of my customers will call me and say, I added an extra room. Can you please add that into my estimated replacement cost? And I'll definitely do that for them.
So the number one thing on a policy is what we call extended limits. The 2 ladies alluded to that fact. So that's just an overall cost of that. But you're talking about something different, which is, well, I got these old windows and whatnot. And so another vital coverage within your policies is called building code upgrades. What that does is that in the event that you have a loss due to a covered peril, all right, and the companies cannot put back what you originally have, and what the city requires you to do is put something back that may cost more than what you initially put in. Building cost upgrades kicks in to pay that gap. so that now you're going to get a new energy efficient window. And this happens constantly in our industry. If any of you guys have done any remodeling, even if your house is 1 or 2 or 3 years old, cities are constantly changing their code requirements. So sometimes we'll read that the companies have to put back what is there and basically pay you back for that. But if the city doesn't allow it, then you're stuck. And so if you don't have that building code upgrades, then the companies will just cash out on what the actual cash value of that item is. But if you have building code upgrade, it kicks in. And then the replacement cost comes into factor, extended limits, because do you have enough? Because now all these costs are, say your house was $500,000, and if you were with XYZ company, they may only give you $500,000, but with all these extra costs, it's going to cost you $540,000 to rebuild. That $40,000 comes out of your pocket. Whereas if you had extended limits, like the lady said, if you had 20% more, which is going to take my $500,000 to $600,000, then that would absorb that cost. So there's two things you really have to be careful to ensure that your policies have so that you are adequately protected. And I can tell you from the brush fires, many insureds found out that, hey, what they thought they had, they didn't. That's why it's really important that you talk to your insurance professionals to make sure that you know what you got, because all insurance policies aren't the same.
Well, unfortunately, we're running out of time. We're a little short here. I hope you guys got some great information. I want to thank the panel, ladies and gentlemen, Patricia, Liberty, and Mark.